Welcome back. I'm Ted Thomas. On this episode, we're going to handle the question and give you the answer. Is Kentucky a tax lien state or is it a tax deed state? I'm also going to give you some insider tips on how to make money. And why don't we conclude this part of my video and we'll show you some of the mistakes to avoid because newcomers make two big mistakes, and I'll talk to you about those. Is Kentucky a tax lien state or a tax deed state? Well, it's a tax lien state. Now, Kentucky has a lot of counties. I'm talking about 120 counties. All of these counties are authorized by the legislature of the state to have a tax lien sale. But what you really care about is why do we even have a tax lien sale? Because someone didn't pay their tax. If that property owner doesn't pay, well, the government's going to have a shortfall. So the government's concerned about that. You're concerned about that. So what they do is they sell tax lien certificates. They're nothing more than a piece of paper that authorizes the person that owns the certificate to make a nice return. Now, in the state of Kentucky, you can earn a 12% return on your money. And you could do that just by raising your hand at an auction like I'm doing now and buying a certificate. Now, you can't give money to Ted Thomas. You always give your money directly to that county. So that means your money is protected. It's safe. As a matter of fact, the property tax code protects your money. So these investments are predictable, they're certain, and they're secure. And you're saying, well, what's the security, Ted? Well, here's what your security is. When you raised your hand and you bought that certificate, the local government said, all right, we're going to make sure you get paid. Now, if the property owner didn't pay them, you'd be concerned, are you going to get paid? But you have an ace in the hole. What is that? Well, if you don't get paid on that tax certificate, you're going to end up with the property. And what did you pay? Well, you only paid the back taxes and a few penalties. So if you didn't get paid, now you got a property for absolute pennies. Nice way to buy real estate, I'd say. So 120 counties throughout the state of Kentucky will sell these tax lien certificates. So why don't we have a brief explanation of what a tax lien certificate is? It's just a lien against the property that's filed by the county. That makes it the first lien. It's always the first lien. Now, why do they have this lien? Because they want to force the homeowner to pay taxes and pay taxes on time. Now, the county needs money. They need lots of money. They have lots of bills to pay, and in order to pay those bills, they need every property owner to pay their tax. If the property owner don't pay the tax, how on earth would the county pay for the fire department? How would they pay for the police department? What about the school teachers? They all have to be paid. The buildings have to be maintained. Kind of like the roads have to be maintained. So the county has a lot of bills to pay, and in order to pay those bills, they need all of the property owners to pay. If the property owner doesn't pay, now they sell tax lien certificates so they can get money in to pay their bills. So you buy the tax certificate because you've been making 1% at the bank because you're maybe a conservative investor. You're worried about your money. So what do? You invest your money. So if you invest in tax lien certificates, you can earn up to 12% in the state of Kentucky. Now, other states pay even higher amounts. Well, why would you be interested in other states? Well, Florida pays 18%. In Texas, you could earn 25%. In Iowa, you could earn 2% a month or 24% annually. So think about that. Now, why do I tell you about those states while I'm talking about Kentucky? Because we're going to teach you how to do it online. Wouldn't that be nice to do that online? You could sit there on your rusty dusty, look at that screen like you're looking at me, and you could be making money from home. How about that? Now, you can't give money to Ted Thomas. There's no brokers to pay. There's no other people to pay at all. There's no middlemen. All of your money goes directly to the county. So I tell people, this is the safest, the most lucrative investment in America today. So who am I to tell you that? Well, I've been doing this for about 30 years. I started out as an investor. My first 5 years, I just invested because I wanted a safe, secure investment. Then people started asking me questions. The more questions I got, I started writing them down. And pretty quick, I wrote a book about it. And then I created some audios and some CDs and whatever. And now we're doing it on YouTube videos. So we've taught a lot of people to do it. But I didn't just do it myself. I taught hundreds of other people. So I'll show you how you could make money $1,000 a year, $10,000 a year. I have people that make up to $100,000 a year doing this business. Does it take a long time? Well, how long did it take to walk in, sit down at your computer, and you could start making money? Now, when do you get paid? Well, you don't get paid from Ted Thomas, and you don't get paid from anybody but the homeowner. So when the homeowner comes in and pays their tax, the county will call you. Or if you bought online, they will just put the money in your account because you bought it online, so it's a complete electronic transaction. So you don't even have to go out and meet people. You could do this sitting at home. So tax lien certificates have been available for a little over 200 years. People have learned how to do it. You can do this for the rest of your life. You can do it in half of the states in the United States. They sell tax lien certificates. The other half of the states actually sell tax defaulted properties. So I've got a few minutes left on the video. So what I want to do is I want to tell you a little bit about tax deeds. But first, tax lien certificates pay you the interest rate prescribed by the state. I don't decide the interest rate. The legislature says 18% in Florida, 24% in Iowa. In Kentucky, the legislature says all 120 counties will pay 12%. All right, so that's what it is in your state of Kentucky, if that's what you're looking. But you can look any way you want. It doesn't matter. You can buy in any state because you can do that online. Now, what are these tax deeds? Well, you live in a benevolent state or you're researching a benevolent state. The benevolent state is Kentucky. Why are they benevolent? Because the property owner doesn't get kicked out of the property. They have to pay a 12% penalty because they were late in paying their taxes. Now think about what I said. If you have a credit card in your pocket, you pay it late, you pay a penalty. It's the same thing with your property taxes. If you don't pay them on time, you're going to pay up to a 12% penalty in the state of Kentucky. All right, that money takes care of the government. Well, on the other states, like New York, California, those states are not benevolent. They will tell you if you don't pay the tax, they'll send a demand letter. The demand letter, under the rules of law, is nothing but a notice. And the notice says, if you don't pay your tax, we are going to confiscate. They're going to actually seize the property, and they'll put you out on the street. Now, what do they do when they seize it? Well, they don't want any more property. So what they do is they sell it. And they sell it at auction. So those are called tax deed auctions. So some people call them a tax defaulted auction. What do they sell them for? Well, the government wants taxes. So they sell them very close to back taxes. Now, they add on money for penalties and to pay auctioneers and things like that, but they sell property for back taxes. So here's the important thing that you need to digest as I talk. On a tax lien or a tax deed, the mortgage is wiped out. The mortgage is wiped off the property. It's extinguished. The local government, the legislature, made that rule. Now, why did they make that rule? Because they're going to force the homeowner to pay their taxes or give up the property. It's one or the other. Now you're saying, what about the poor banker? Are they going to put up with that? Well, let's not worry about the poor bankers because they're not poor bankers at all. The bank is given notice at the exact same time they told the property owner, we're going to seize your property. They tell the bank, we're going to seize that property. The government only wants one thing once you own that property. They want a property tax. So they tell the banker, they tell anybody that's on title, if you don't make your payment, well, guess what's going to happen? We're going to take the property, and they do that. Newcomers make big mistakes, so let's make sure you avoid those mistakes. So the first big mistake that I watch people make is they buy either a tax lien or a tax deed, and they have not looked at the property. I'm going to tell you, don't buy a tax lien, don't buy a tax deed, unless you looked at the property. What if the property had burned down? What if there'd been a windstorm? What if there had been some crisis on that property? Or what if you'd never looked at it and was built next to an oil refinery? Is that what you want? It's going to not smell too pretty in that property. Number two, many investors do this, and I'm amazed that it still happens, but people buy property and they have no exit. See, the word auction gets you excited. Everybody's excited because going to an auction, they're going to watch the bidding. They want to win the bidding. Well, you don't want to win the bidding by going to high price, I can tell you that. But if you don't have a plan to sell that property or what you're going to do with the property, for goodness sake, don't bid at auction because you may way overbid. You may overbid the property. I've seen people bid 120% of the value. They paid more than the property was worth because they didn't go look and they had no idea what they were going to do with it. So I have a mini course if you're interested in that. And what you could do is you can just go to a link below and there's going to be a mini course there and you're welcome to it. It's free.